Hi guys, welcome back to another important video. This is nothing but your weekly outlook for Nifty. I'm going to share my views on Nifty structure at the moment, and we will also compare our strategy, what is happening in Nifty and the strategy we executed on Thursday in the demo account. I'll share that also. First, let's look at some history in Nifty, what is happening here. From the bottom of Nifty, when the market was rising like this, I told you this structure is not clear because Gift Nifty, your futures chart of Nifty, S&P futures of Nifty, all of them were showing different structures. Right now, when the market made this kind of a structure, I told you it has become a little bit clear. What did we have our analysis? We took the Fibonacci retracement tool, we put it here. Our main analysis was simple: as long as 38 to 50% zone was intact, we are looking for an upside momentum. This was our earlier analysis. So what happened after that? Market went sideways and we had a good correction here. Market gave us a good rally on top. This rally, after the the ceasefire news, we had a good gap up here. Third wave, we got a bottom at this point. We got this rally expiry day. All this happened in the time cycle zone, and then we started going sideways for a long time. In the month of May, the price momentum was only 1,000 points, approximately 1,100 approximate pounds, but 1,100, 1,200 approximate. But the entire thing here point is that this is a consolidation state. This is a consolidation state. And right now, the first basic analysis, I'm going to keep it very simple so that those who are still practicing your Elliott waves, you can understand it. First thing you must note is that this point here from the fall, it came in a three-wave pattern. All right. This is a three-wave pattern. Sharp pullback. Let me zoom in. It'll be much easier for you. Zoom in. We're using a 1 hour chart. So first I'll go to a 1 hour chart. We'll understand the outside overall perspective, and then we will go down a smaller time frame, 15-minute chart, and understand exactly what is happening. In a 1 hour chart, you can see from this high, price is moving in a sideways pattern. Price is moving in a sideways pattern so far. Now question is, from here, which direction will it take? Will it go down, stop here, and can it become a triangle pattern? Yes, it can. Can market give us a breakdown from here and go this gap? Can it fill this gap and retest this low? Yes, it can. Can the market suddenly pause here without going down, just touch this gap? Can it go next higher? Yes, it can. So when you have all these different possibilities in the market, first you must check which wave is happening here. So if I just zoom out and show you again, this is a possible wave 4. This is a possible wave 4 in the market. So as long as from the bottom, let me just zoom out a little bit, April 7th bottom to the current high, as long as your 38 to 50% zone, as long as this is intact, like I told you earlier, we are looking for trend continuation. If the market falls, let's say 700 points down like this in next 2 weeks or whatever, don't think of it as a big, fall in the market crash scenario or something. This is a normal correction. 38 to 50% zone. This is the boundary line. So as long as this level is intact, we can expect a new high to come because this becomes a consolidation. Now, question is, if this is a consolidation, how is the pattern coming here? What is the pattern here? So like I told you earlier, in textbooks, in many YouTubers, the gurus, what they do is they tell you this is an A wave, B wave, C wave. It has to come for Fibonacci 1x, Fibonacci extension 1x. I've told you many times in my own Elliott Wave Master course that this is not the case. I have seen so many global markets and all of them behave differently. But the common rule for us is that minimum 78%, minimum 78% extension needs to be completed. All right. So if this is a three-wave pattern, then minimum 78 has to be completed. And also before that, this swing low has to be broken. This swing low has to be broken. So we are likely to see, if this is a three-way pattern, 24,400 to be tested, the swing low to be broken. It can go all the way down. It's up to the market. We cannot decide that. It is up to the price action at that time. So how do we plan now? How do we plan for a setup? I'll tell you that. We'll discuss that in the strategy. But first, try to understand this is one of the possibilities. So as long as your 38 to 50% zone is intact, it will be a buy on dip scenario for me. It will be very simple because the structure dictates on a higher time frame that this entire move will only be a some kind of a wave 4. All right, this will be some kind of a wave 4, and then we will bounce back higher. Simple as that. Now question is crash scenario. Crash scenario. Next question comes for a crash scenario. When is it possible for market to give us a good crash? First thing, I told you that the market started off with a three-way pattern. So when anything starts with a three-way pattern, I have told you many times, there is no big move. It's only part of a correction. There's no big move which will start as a big, let's say, final first impulsive move, which will start as a three-way pattern. This will never happen. Whatever happens, market will come back to retest this point again, right? This is one of the scenarios. But in one case, if the market is making a leading diagonal pattern, market makes a leading diagonal pattern, this means that market is preparing slowly for a big fall. So leading diagonal pattern comes in only in wave 1 or wave A. But if you're planning for a big crash scenario, it will be like this. Okay, this part, this is a leading diagonal pattern here. That is, again, it'll take a lot of time for it to form. It won't be in next week. It'll take at least 1 or 2 weeks more. So I'll keep you posted if this happens, but this is very highly unlikely at the moment. But as a wave analyst, we have to keep this scenario open. We'll keep it in mind. We won't forget it. We will keep it in mind. This is possible. Now we have this much analysis. We know that 38 to 50% zone is important. We know that market can fall this much. Now we'll go to a smaller time frame. Before I go to a smaller time frame, let me just remark the 38 to 50% zone here. Right. Done. So 38 to 50% zone has to be on your chart at all times. Let's go to a 15-minute chart and see what is happening. This is a 15-minute chart of Nifty. It is a proper sideways momentum here at the moment. What I can tell you so far right now is that this fall also started off with a three-wave pattern. Understood? This is very clear. This is a three-wave pattern, a sharp pullback, W, X, and Y wave. Now, this is a big confusion area. This is a big confusion area of what exactly is happening. Friday's move, when it came instead of giving a continuation in the pattern, market came back inside the range and it closed within the range of Thursday expiry day range. It closed within the range, so it became an inside bar type. Problem here is that the issue with this kind of momentum is very simple. It creates a lot of confusion. This is a three-way pattern. Like I'm telling you one example. You can see that this is one leg, this is another leg here. What if market does this kind of a pattern? This becomes your expanding triangle. This is a rare pattern, very rare. I don't expect this to form, but again, I'm not let's say ignorant. I won't forget it. I'll be aware. I'll keep in mind if this happens. This is a very rare pattern. If expanding triangle forms, you can only find out confirmation if this kind of price action happens and market starts to fall from here. Only then. That is how rare it is. It is not possible to find it beforehand. You cannot predict this pattern. It's very rare. All right. So in this case, what will happen? Market will finish this zone of consolidation and it will continue its down move. Simple, done. In any other case, if this is your WXY pattern, W, X, and Y, If it completes here, this is a 3-wave pattern. Market can start a new move down like this. To complete, this is your A wave, your X wave, your B wave, whatever. And then we can go for a C wave down. Simple. So this will complete your entire 3-wave pattern like this, fully. Simple. Now, what if market on Monday does something like this, and then Tuesday, Wednesday onward starts to fall slowly? In any case, this is again a 3-wave pattern. The last worst case scenario for all traders is that market makes a triangle. Worst case scenario. Worst case scenario for next week is market makes some sort of a consolidation triangle pattern. The reason for this is because it will cause a lot of frustration among traders. A lot of people will lose their patience. They'll start lashing out. They'll start taking random trades in the market. So this is basically 2 weeks market has tested your patience and is continuing to test your patience. That will be hard. Third week will be very difficult for many traders. Right now, strategy wise, I'll discuss that. Before we go into strategy, there was one video I released yesterday, the recent FRVP video for market reversals. Many of you asked doubts immediately. I told you most of you have not yet studied the Elliott wave properly, and directly you have jumped with half knowledge. But again, I will clarify that doubt here in this video. Simple. Market reversals, we wanted to find a pattern. We want to find a pattern, and many of you have asked me, sir, this area of POC. Again, if you did not watch the video, I highly recommend you watch that video and come back and continue this video, or else you will not understand anything. So this part of the POC, FRVP part, this POC has not yet shifted. This is the first earlier POC. Next, what we did is we moved the POC simply to the next level over here. You see that the POC has not shifted, only a little bit. That's fine, not an issue. So what we are doing here is we are drawing the POC here. Let's draw this POC first. All right. This is the earlier POC. So what is the price action which has formed here? What is the price action? This is the required price action. We wanted this. 1 second, let me go. This is not the right one. 1 second. Just adjust it again to the exact top. Right. Right. So this is the POC right now. What has happened in price is that price has gone for a new high, but POC has not shifted. So the question here is, the price has gone for a new high. POC has not shifted from this point. Shifting of POC is nothing but, like I told you, this is the most area of most valuable transactions. So far from this point here till the exact top, let me draw this white line. So till the exact top, the POC has not shifted. It is still here. But most of the people have doubt is that, sir, this POC again shifts, but this, so as per our rule, what is it? This level has to be retested again. As per our rule, when this happens, this pattern, market reversal pattern, POC, this level has to be retested. Simple. We know that. Now, doubt people got was very simple, that so far, when they keep shifting the POC, at this point, somewhere here, POC is not shifted. 1 second, let me just change it. So when you come to the recent price action, POC has shifted. There is a new POC here, point of control. But earlier POC is not yet tested again. Earlier POC still has not been tested, but there has been a POC shift. This is where I'm telling you, have some patience. This is a pending POC. It will 100% come and test. But the doubt is that, sir, why has it not tested? Immediately it has to test, right? No, it does not have to be immediate. This is nothing but a 3-leg pattern. If it forms a triangle here, what will you do? If it forms a triangle here, what will you do? It won't come back. After a 5th wave, after a new high wave, and then later it will come, it will hit all POCs. But like I told you, this has to be tested. And once you have knowledge of waves, you know that this is a correction pattern. Correction can come in different forms. right? Correction can come in different forms. This is where I urge you, I told you, you have to study the market structure. We know that this level will be retested in the future no matter what happens. Try to understand that no matter what happens, this level will be retested. So what I'll tell you right now is very simple. Let's go into a little bit advanced stage here. We have this move here. We have the old POC, right? Now we have old POC. We have your 38 to 50% zone. We have old POC. What I'm going to ask you to do is I'm going to ask you to start your FRVP from this level. Start it from here. And if you think market has to reverse from here, what do you need to find? Again, I'll ask you same question. I'll repeat the question. If you think after watching the latest FRVP video, which I posted regarding market reversals, if you want to find market to reverse from here, what is the pattern you must find here, or what must happen to the FRVP? You must find a new FRVP where the POC stops shifting, correct? So right now, if you put your FRVP here, your POC is exactly in this zone. Let's change the color so it'll be different. Let's put it as purple. All right. So right now, this is a new POC here. Orange, fine. New POC at the moment for this fall only, for this correction part. So what did I tell you? In corrections, either some wave B, some wave X, or directly on top only, the POC will be there. It won't come. We want to find a dummy move. So what you want to do is you want POC to stay here in this part. If you see more consolidation, this is nothing but your A wave, your B wave will come, and then C wave. This leg should come without your POC shift. Only then it will guarantee for you, yes, market is going to come back for a reversal next week. Understood this? This is a little bit advanced. You have to connect market structure with it. Done. Simple, guys. Don't take it very complicated. It's not very complicated. It's very simple. But only thing you need to put your effort is to understand market structure. That is all. The reason why for a fast retrace it did not come, simply because this is a correction pattern. We are in some sort of a fourth wave. That's all. Fourth wave, we already know it can come in different forms. Now, first thing we found out is for next week, one of the old POC level. What if market breaks that? How to find key levels again from your FRVP video series, education series. I told you, try to find as many levels as possible. This is one of the old levels here. In case market breaks down, let's find another level. Another old POC level is here. This is again, let's keep it at a different level. Any other level POC, key levels. Again, this is the second lecture of FRVP. Key levels. Okay, something is here. And not only that, if we take the previous swing, this fall here, what do we get? We get another level here. So this is nothing but inside your 30 to 50% zone. So tomorrow or next week, anytime there is a big fall, assume there is a big fall in the market like this. So till where are you targeting? Where are the important levels here? If this is your level which breaks, what is the confirmation? What is the next level, right? All this you will know in advance. Let me just check if there's any special level left. Did we miss any level? Let me check that first. This is the POC, fine. Checking here. All right, same, not bad. All right, nothing much missed here. If there's any other level here, just note it down at 23,900 or something, because this is the previous high. Anyway, so you know different levels where market can take support if the market suddenly breaks down next week. As simple as that. Confirmation of breakdown. There was one small level here. Let me show you. Go to a 5-minute chart, which I shared in a different video. In a 5-minute chart, or any chart, you can take it. It's not a problem. I'm just showing 5-minute chart for clarity. Take this recent rise in the market. The POC is on top here. If you take it to this part here, we are just finding high liquidity zones. That's all. You can see there's one POC at this level, old POC. So basically, what are these POCs? These are nothing but high liquidity zones, key levels, high liquidity zones, where your big players have done some activity earlier. Somebody has been trapped there. Somebody has been trapped there. This is some liquidity area. So what is the key level for next week in case of breakdown? 24,600, and below that we have your swing low here, that is the gap level, and we have your POC at 24,340. This is the old one which has to be retested. That's all, nothing complicated. We used the same study material on YouTube, your Elliot Wave Master Course, your POC, your FRVP education series, where we have discussed traps, we have discussed key levels, we have discussed market reversals, operator activity, all that. Study them, you will get this. Now, the main part here, strategy. All this analysis is very good. We have to convert this into a strategy. Last week on Thursday, I made a video on live market. I shared a strategy which I'll be tracking for this week. And this strategy is currently like this. Earlier, it was not looking like this. I'll go step by step and I'll show you how we arrived here. What were the adjustments? If you want to watch the entire video again, that is just a 5-10 minute video where I've discussed the weekly strategy for June 5th expiry. There I shared some levels, how we tracked same thing. Basically, it's the same thing, but these are strike prices where we have executed our this thing, practice strategy. Simple. Many of you asked, many of you are first time practicing this kind of strategy. So they asked, how do you make a demo account? How do you track this for the next week? I'll share a separate video in the next few days, how you can make a demo account. And it's very simple, 2 minutes work. I'll share it, how I use it. How do I track expiry to expiry, monthly expiry to expiry, any other strategies if you want to track. I'll make a different video. I'll show you how to use the demo account. If you have time, if you want to wait for it, very good. If you have time, just look at Sensible. Again, I am not sponsored by them. I have no kickbacks. I don't get any money from them. I'm sharing what I use. I've been using this for a very long time. And by far, this is the most user friendly for all retail traders, right? I'll explain this in another video in the next few days. Right now, I'm going to take you to StockMock. There's another website here. There's another platform. This is very good for back testing, simulate. Now you can change the color. Again, obviously you can change color from white to black. It's up to you. But right now it's too bright for me. So I'll just use black. Very simple. What am I looking for? First, I'm looking for June 5th expiry. What I'm doing is right now I'm going back in history for back testing my same strategy, what we executed on Thursday. So we're going to June 5th expiry. We're selecting that option chain. Date I'm changing. Date and time I'll change it here. So we went on Thursday. We'll go to Thursday. That is your 29th, 3:25. So as per our strategy at 3:25 p.m., what did we want? We wanted what is the at the money strike price. So from at the money strike price, we just change the option chain changed 5th June. Very good. Right. 24,850 was your strike price. So what is the idea here? 350 points up, 350 points. We want to buy the call option. 350 points downside. We want to buy the put option. PE we want to buy. So we'll do that first. That is the strategy. We are inverted iron condor. I think this is a common strategy, but how we execute it is totally different. So 350 points far, we have taken your option buy call option to 25,200. 350 points down, we will buy the put option. Done. Now, first step is over. Second step is 500 points far on top. This is your call option, right? 500 points. We want to sell your call option, and 500 points down, we want to sell your put option. This will create your iron condor. So 1, 3. 1, 2, 3. This was the strategy executed. Again, it can be a little bit different because simulator is different. Data might be different. I might have executed 1 minute back. Don't take it exactly. I'm just giving you a rough idea. So exactly at Thursday, 3:25 p.m. in the afternoon, this was the plan to execute the strategy. Now, the reason for this, what is this telling us? This is telling us as long as market does not stay in this zone. What is this zone? This is nothing but your 24,433. This part is 25,257. These are break even points. So as long as market does not stay here, you will make money. So this basically means some sort of a trending move next week, some kind of a trending move, any trending move here. So basically this is what was the execution. Let me just change it here. 350. This is 350. So this is the execution on Thursday, 3:25 p.m. Simple. Now the idea is breakout. You see this range? What did I tell you as per our analysis? One of the directions we want. One of the directions. If we get this breakdown, three-wave pattern, very good. We will make some money. We don't need to do anything. If the market does a sudden opposite, some news, market goes extreme breakout, you will make some money. But price has been consolidating in this range for far too long. It is bound to give us a trending move anytime. This was the analysis, and that was the strategy we applied. What was the adjustment? Friday, what happened? So Thursday is over. Friday, what happened? Market didn't do anything. It was sideways. Market did not do anything. It went sideways. So when I saw this pattern, when I saw this happening, instead of Friday market going rally, full blast rally, at 10 o'clock, what did we do? At 10 o'clock, we did add, simple. We just added one strangle here, out of the money, 24,000 and 25,500. 24,000 and 25,500. This is put option short strangle, basically call option short. So at 10:50 approximately. So what I'll do is I'll just go forward 10:50. 10:50. I'm simulating the historical price. I'm coming forward by, yeah, exactly. So at this point, we are at trading at Friday 10:50 morning, and this is a strategy so far. It looks the same. We did not make any adjustments. So far, 700 plus points here, 700 rupees profit. Again, this is not, don't look at the profit. It's not a big deal. We're just only using single lot setups practice. That's all. My own philosophy is that if you can do it in one lot, you can do it in 10 lots, 100 lots. So right now we're just looking at this. And what did we do at 10:50? We added a strangle in our demo accounts at this thing at 24,000 and then 25,500. 24,000 and 25,500. So now this, if you look at the Telegram group, I've updated everything step by step. So your strategy before, it was showing a big loss in this 4,000 loss. It was showing here sideways if market goes sideways. Right now it is showing approximately only 600. Only 600 loss if the market goes sideways here, 630 rupees. So what is the idea right now? What is this basically telling me? This is a double ratio spread. This is a double ratio spread. So if you look at the chart here, this is the chart of 10:50 a.m. strike prices. So if market comes here, big break outside on expiry, we will make money. If market comes here, this big range breakdown happens on expiry next week, we will make money. What if market goes sideways? What if market goes sideways? We will lose only 600 rupees. That's all. Only 600 rupees. That is what is double ratio spread, and timing of execution, all that is different. I'll explain it in the next educational series when we come. My favorite, this is one of my favorite setups, ratio spreads. How do we adjust them? Partial execution, advanced execution. I'll talk about that. Right now, simple, this is a plan. But this is not the final adjustment. What is our inverted iron condor adjustment, which I discussed at 3:15, 3:25, 3:25. What was the plan? 3:25. As this is the extra strangle we added, extra strangle, extra sideways to protect our thing. At 3:25, the idea was For inverted iron condor strategy, just shift 50 points inside. Shift the original strategy 50 points inside. We have to shift the leg, call option and put option leg 50 points inside. So what does it look like finally? This is a very complicated setup. I still recommend you watch it. So you have to book this 350, 350, 350 booked. Done. Then shifted 50 points inside. That is nothing but your from 350, 24, 350 mode, shift 50 points inside. So next day we shifted it at 325, 50 points inside. Sorry, this is not 50 points. Right. 350 will shift it to 300. Right. So now this is the final strategy. See this? This is the final strategy, which looks like this, right? Exactly like this. This is the final one. Basically, it means that if market goes sideways also for the next week, we will have zero loss. If market falls down all the way to 23,800, what is the break even? 23,900, basically. 23,900 also, we will make profit, very good profit. If market gives sudden rally to 25,600, we will still make some profit, right? So this is not the final. Again, we have to do adjustments day by day that I have discussed in the video there. But try to understand, we have just converted our analysis into a strategy in case market breaks down, because like I said, this is a sideways momentum. It can do anything. Suddenly you can see breakout. Secondly, you can see we expect a breakdown towards the lower level. We are ready for that. That is why our strategy on the lower side is a little bit bigger. On the lower side, it is a little bit bigger. On the upper side, it is a little bit smaller because it's a little far away, In case sudden rally also comes, we'll still be in profit, right? So breakdown, if it happens, we are still safe. 23,900 levels. 23,900 level is basically your previous swing low here. This area. 23,900 is your basic swing low here, different area. So by your expiry day, if market falls like this anytime, you will be safe. If market bounces suddenly, if expiry day bounce comes like this, you will be safe on top also. This is how we plan the entire thing, and this is how you can convert your analysis into strategy. It's not easy. It is a little bit complicated when you go to advanced level. It's very simple if you understand market structure. It's very, very simple if you understand market structure. Complicated for those who look at, oh, I have to do this adjustment, I have to do that adjustment, capital requirement. That is different. Those who can't, like I told you before, if capital requirement is an issue, look at breakfast indicator. That's all I'll tell you. Use the breakfast indicator, find your own strategy based on that. It's very simple. Watch the guide video. It's available in the bottom of the, sorry, in the link of the description box. It's there. You can watch the link there. Sorry, the video there. It's very simple. Point here is that going forward, I'm going to teach, or I'm going to share my views on how you can make these strategies on your own. Very simple. You need to practice market structure. Market structure, Elliot way, you have to practice. Only then you will be able to convert your analysis into strategy. Those who are already studying, it will be very good for you because you already know how to do it. Those who are studying the advanced concepts, for you, finding market structure is much easier than everyone else. Strategy application will be dead easy. The only thing I'll do is I'll just guide you how to make a demo account, how to practice, how to make a draft portfolio, how you can track historical prices. If you want to do back testing, you can do that also. I'll teach you how to do that. It's very simple, 2 minutes. If you have time, you can just explore it on your own, Sensible and Stock Mock. All right, in a couple of days, I'll make a new video for this demo account. It'll be easier for you. Thank you guys. I'll see you in the next video. I hope you take some value from this video. It's a bit lengthy video. I have to explain everything deep by deep. And this value will help you definitely in your trading journey. Thank you and take care and be safe.